Hey, good morning, everybody. This is Vance Williams. I'm back here in the Seattle area. Had a little bit of a cold, so my voice sounds a little bit different. Things went really well in Texas, and it's good to be back home with my family, Pierre. I'm ready to, dig in and get this week started. So, just kind of to kick things off, on Sunday, I was looking at the markets and I saw that Friday the US dollar climate was cooling a bit, and I'll definitely talk on that. To see more of what I'm talking about on the show, when you do click play, it looks like it's not running yet, but this will start very soon on here, and there will be a join the conversation right here. And when you do that, you'll actually see some links to where you can follow me on Twitter or go to my website and download the free books. So let me click stop on that. I think I'm going to have to cancel that out just to make sure it doesn't start running while I'm talking. This system I'm currently using, I have it set on a 90-second delay. As soon as I get everything the way I want it, I have the ability to run it literally in real time. Usually it's not, it's not an issue for me to have that delay. In other words, you guys don't miss out on anything because of it. But I do plan on turning that on. It's just learning some new parts of the system in order to do that. Okay, so and when you do go to my site, you can see the books here on the top right. 8 things they don't tell Forex traders, and the first battle. So both these books, people love this. They've downloaded tens of thousands of them. A lot of great feedback, so do check that out. As far as my mailing list, I might mail once a week, to share some insight with you. Okay, so let's get out to the charts here. Looks like I didn't label this yet, slash USD 30. All right. So before I get into the charts, I want to talk about the big bank trades. I see most of the big banks being very conservative right now with their entries. The ones that are being aggressive are losing money. I did notice that one of the most successful banks entered a sell order on the euro at 124.74. Let me look at 124. They went in about right in here. Now their stop is way up above 12700, so they're obviously aiming quite low. These guys don't win every trade, of course, but I think in this case they're betting on the euro going for a new low before it moves above 2700. I'd probably agree with that myself, but each trader has to manage their risk in their own way. One last thing on the bank trades. Keep in mind that I have no way of validating. I think I have a very good source on this information, but I really have no way of validating whether what I'm saying is true or not. That's one of the reasons why I'm just not saying the names of the bank on these public sessions. I talk about them in our private member sessions, whether it be JP Morgan, Morgan Stanley, Credit Suisse, what have you. So I don't want to get in that mix of naming names and stuff like that. But anyway, I'm seeing some really good patterns, and I think it's insightful for to kind of see what they're doing. In fundamentals today, we have Draghi speaking this morning at 9 a.m. Eastern time. That's coming up in about 28 minutes or so. There was a little U.S. dollar cooling, as I said, on last Friday. Probably one of the reasons for that is the St. Louis Fed President Bullard stated basically that he saw less reasons for an interest rate hike in the future, mostly based upon wages. Positive news from Draghi out of the ECB this morning could give the euro a lift. I think there's going to be a lot of traders kind of sitting on the sidelines till they hear what he has to say. Some are aggressive and they're going to be betting one way or the other, but those who are looking for high probability movement, they're probably going to wait, see what he has. Fundamentally, nothing has changed, right? I mean, not anything significant, but talk could artificially give the euro a lift. So we'll just wait and see. That's coming up very soon here. Let's move on to price here. So this move right here, that's on the 14th. If I look at my calendar, 14th, that's Friday, right? So this was this was maybe a couple things, including the St. Louis Fed talking down basically the dollar outlook a little bit. And so it reversed up this way. They made another push here, smaller move. And then just notice they're just kind of right here in the middle. The money still flipped to the top side, but the uncertainty is holding it down a little bit right now, waiting for, you know, some other pretext, some other catalyst to say, hey, we're going up or we're going down. Let's see. So in terms of the price, to buy here, your highest probability setup is going to be above 25.67. And the reason why is because anywhere in between here, you're going to have, you know, buying and more buyers and sellers. But you break above there, you basically take the wind out of the seller's sails. There are other ways to trade this that I won't get into on this call, but all of them are lower probability. And you know, more inexperienced traders need to stay away from that, because inexperience already stacks the deck against you, in that there's more events that you can't anticipate. In other words, more movement appears random to you. And in addition, until you develop a kind of a new normal in your brain and how you execute these trades, if you lose too many in a row, it's really painful. I've written about that. It's called the psychology of consecutive loss. But basically, you need to win more than 70% of the time to, you know, to be able to manage that pain threshold. As far as the sell, let me take a look. That looks like it's coming in about a little above, 76.4 of this move right here. So this is really the key level right here. And one of the ways you can think of key levels is just think of them as places where I think the buying and selling power will be equal. And so right here at this turnover point, you'll get a couple of things. You see this demand area here. This always attracts some buyers right in here when it's really obvious. And then you got a 76.4 of this pretty strong move right here. And so you have those coinciding. So that's what's enticing these guys to buy right here. They're rewarded all the time for doing this, at least taking small bumps off of one of these levels. So for a sell, we need to get through here. And these guys will probably run out of gas, I would say, right about in this area right here. So all the way through here, you'll continue to see buy orders. So look below there. I can put a price on there for you if you want. 124.67, about there. But yeah, for our traders who work with us on our team, you know, look for a move. Look for these moving averages to turnover. Those of you who that's part of your rules. But if you're a little bit more aggressive and you've got it so that you can go early, make sure you just stretch out below here. Even better if you can get below 24.67. But most of all, just follow your trading plan. Okay, let's take a look at the pound. Pound's kind of interesting. Had a good bounce. Let's see how big of a bounce we had there. About 141 pips off the low. Let's see. The UK is going to be speaking. UK central bankers are going to be speaking on Wednesday. So we'll be following that. That's probably the most significant data we're going to see this week. And so there will be a little bit of hesitation there. Now, I wanted to see, let's see, let me get it crosshairs. What time did this happen? Okay, this confirmed a cross at 4 a.m. So let's drop down at 4 a.m. on the 5-minute, see if there was a trade there. 4 a.m., moving over. Okay, so right here, it looks like there was a move right here to here. And how big was that? That was, oh, nice, 47 pips. So there was a move right here. This was a textbook trader here. Up, pull back to a little over 50%, second push down in the area of the low. So this was a nice trade. I'm assuming that some of our team members who have dollars than us here in the U.S. caught that. So I'll read your forums in just a little bit. So that was a beautiful trade right there. Let's see, Australian dollar. Oh, let me go back. I don't think I finished. As far as another trade, let's go back to the 30-minute. I like to mark these key levels where they resolve on a 30-minute candle. So right about there, 156.27. Now keep in mind, you've got another level just below there. There's going to be some buyers camped out all around 5,600. So if you do enter on a move below here, your risk is increased by the buy orders that are going to be sitting in this area. The reason why I'm telling you it that way is is because you have to understand what really moves the market. It's always human beings. In this case, buy orders sitting around here. You don't need a candle pattern to tell you there's buy orders sitting around here. You just need to know that that's a factor in this context if it's moving in here. And so, you know, what do you do with that information? Well, if you know there's going to be buyers sitting in here and you see a nice setup, you need to know that there's going to be some pushback. So you need to wait and get a better price. Now, maybe price just takes off and leaves without you. Hey, that's just part of the price of managing your risk, right? You may miss the trade, but you don't want to put yourself, you'd rather be in a situation where you might make money or not lose money rather than, you know, I might lose more money or have more risk. And so what I'm saying is, you know, in a situation like this, if you get a nice setup before it reaches this bottom, make sure that you get a better price, because you're going to get that pushback, and that'll get your stop up here. And these guys who've been selling all, you know, since London opened, they're going to try to push again, and it also gives you a better target price. Top side we won't look at. We're pretty far away from that, but you know, I'll publish something at forexartofwar.com if it shows up. Again, you can get my books at forexartofwar.com right here on the top right. And you can always write me a question if Vance at forexartofwar.com. There's all kinds of ways to find me. I'm easy to find. Let's see, a couple of announcements. We're going to be opening up our training soon. It's been closed for a while. So you'll be able to see 3 different programs you can evaluate. We're also going to be having a kind of a special offer for our newest program. And so, you know, you guys watch for that. Write to me about it if you want to know more about it. It's going to be pretty exciting because now we not only have our incredible accuracy trading based on price logic analysis, which is about as accurate as you can get, but you also have medium-term trading, which is actually easier in many ways. And so that's developed as a result of competition re-entering the market with the divergence between the US market and the Eurozone. So that's opened up some incredible opportunities, really, that haven't existed since 2007. So this is a really great time to be learning Forex trading. And not only that, we've got on the horizon, you know, I can see it on the horizon, we have the whole digital currency revolution coming, which is, oh, it's like the difference between not having the internet and having the internet. It's that big of a change that's coming, and those of us who know how to trade currency, it's gonna be really something. So I hope you got just one idea this morning that helps you. Members, I'll see you guys coming up at 9:30 a.m. Eastern. We'll get together as the New York Stock Exchange is opening, and we'll talk about your trades and what the market's looking like. Thank you, everyone. Have a great one.